All right. Back to work. Back to work. Weekend is over. Holiday is behind us. Hope you guys had a very happy Labor Day. Hope you guys got some rest this weekend. We have a big week ahead of us. First week of September. First week of the brand new fall trading season. We survived the summer, and man, do we have a lot to talk about tonight in a very important video. Have a ton of great trades I'm tracking for tomorrow. And you might have noticed there's a beautiful bull trap that just fired off on the 60 minutes. So we get a lot of trades we're tracking for Wednesday's trading session. I'm going to cover all my favorite trades, including that bull trap on the video tonight. That way you have a game plan to make some money on Wednesday. Before we jump in though and get the party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. And if you like these videos tonight, do me a favor, will you? Hit that like button for me. Give me a shout out down in the comment section below. Thank you so much for tuning in, supporting the channel. But enough of the intro. Wednesday is coming in hot here right now. Goodbye to the summertime season. In comes now the fall time season, one of my favorite times of the year to be a trader. September, October, November, December. I'm getting excited just thinking about it. Let's start off tonight on the 60-minute time frames. Got some 60-minute charts on the E-mini and, of course, the Nasdaq. Remember, guys, I like to use these 60-minute charts to help me plan my trades for the following day. And then later on in the video tonight, I'm going to drill down to some tick charts, and we'll plan the proper entries. Tick charts make the entries a whole lot easier. So we're going to cover it all here in the video. What's going on right now on the E-mini and the Nasdaq? Well, remember, we had that big melt up that we saw last week. That market kept on going higher and higher and higher. That melt up that we saw last week. There's no doubt about the buyers have control of this market, but we never really got a very deep pullback. And so we have to assume that buyers are waiting for that deep pullback to allow them to buy nice and low, right? Deep pullback, love to buy nice and low. So we're very bullish overall. That melt up market, though, never really gave buyers much of a chance to buy the dip last week. And we assume now we're kind of in the middle of that dip happening right now. Now, I mentioned earlier, we have that bull trap firing off on the Nasdaq, so I'll bet there's money to make on the way down, and then possibly some bear traps down here to pop it right back up here. So if we play our cards right for tomorrow and Thursday, I'll bet there's some short trades going lower. I'll bet there's some beautiful bear trap trades down in the support levels below. So we're going to go into a lot of detail on both sides of this market because, again, I think if you're keeping your eyes open tomorrow, there's trades in both directions. Now, before we talk about how to short this thing on the way down and buy it back up again, let's go talk about the schedule for tomorrow. Quickly double check. Tomorrow's a Wednesday. That'll feel like a Tuesday, right? With Monday being a holiday. But all kidding aside, though, there are three things that you want to be aware of. First of all, we will hear from the Chinese trade balance overnight, sometime between midnight and 1 o'clock Eastern time. So just be aware of that. If you're trading in Asia or you're trading in London overnight tonight, just be aware of that news coming out of China overnight. Does have a tendency to shake things up. The second thing you want to be aware of is probably the big news of the day tomorrow is the ISM Services Index at 10 o'clock Eastern time. Remember, anytime you have major news at 10 a.m., you do want to pay attention. The third thing we're watching for tomorrow is that beige book at 2 o'clock Eastern time. We have another FOMC announcement coming in 2 weeks, and that beige book to tip us off to whether or not they're going to raise rates in 2 weeks on the 19th and 20th of September with the FOMC. So we have to assume the beige book is going to be on everyone's radar later on in the session tomorrow. So three things to be aware of. If you're trading overnight, be aware of China and their trade balance data coming out sometime between midnight and 1 o'clock. Keep an eye on that ISM Services Index at 10 o'clock Eastern time. And don't be surprised if that beige book number shakes things up tomorrow afternoon. Let's get back to our charts, though. Now that you kind of know the three things I'm watching here for tomorrow, let's go over now my favorite trades for tomorrow. Let's start with the E-mini SPY, and we'll go down to the Nasdaq and the QQQs. Starting off here on the E-mini and the SPY, as I mentioned in the introduction, we have that big melt up market last week, and we anticipate that we're going to need to see a little bit more of a pullback to attract more buyers in at some lower prices, right? Such as that 44.76 area I have marked up on this 60-minute. And like I mentioned before, I do think there probably is some money to make on the way down, and then, of course, also buying it on the way back up as well. So let's drill down now to our tick charts. And let's talk about this tick chart because remember, tick charts make everything easier, especially entry patterns and trade management. This is a 7,000 tick chart. You can see all the time frames in the upper left-hand corner. And if you're watching for the first time right now, this is the 21 EMA. It's not the only indicator we use, but it's by far the most important that we use to find lots of winning trades each week in our members trade room in the morning. There is really one big clue right now on this tick chart. It's a bear market into a trading range. Now think about the scenario. It's a bear market in the short term, but an overall bull market on that long-term 60-minute. We're going to blend these two together tonight to give us a pretty good roadmap to find some winning trades tomorrow morning. Whenever I see a bear market into a trading range, I always think of two basic ideas of how I want to trade it the following day. One is a breakout pullback. Breakout, pullback, and retest of that low. Oftentimes the underbelly of that range, right, will be used as resistance. Now, during this breakout pullback, there are ways to make money as we go lower. There are ways to make money during the pullback. There are ways to make money on the breakout pullback. And there's also ways to make money, right, to buy that double bottom, what I call a double bottom reversal. So I'll tell you, there is plenty of ways to make profit whenever you have a bear market trading range. I certainly love the idea of buying, but I think, again, there's also ways to make money on the way lower. That is one of the two scenarios I'm looking for here for tomorrow. The other one, of course, in a bear market into a trading range is to short the breakouts, right? Basically fade the breakouts back down into that trading range. This may be exactly what the Nasdaq is setting up for as we speak here overnight. And later on in the video, I'm going to talk about, when we go to the Nasdaq, we'll talk about how to short that top right on the Nasdaq right now and how to trade it if it goes higher here as well. So there are two basic scenarios. One is the breakout pullback, plenty of ways to trade that. The second one is that fade up, right, and short off that high. Let's talk about the move going lower because the Nasdaq is very, very similar to the breakout going higher here. The most important thing as we go lower is I don't want to sell into these major areas of support. Remember, we're an overall bull market. So as we're going lower, you guys are learning these in the free trading course. We're going to need to look for traps, right? Basically bull traps as we're going lower. The key to making money going lower in an overall bull market with a bearishness like this is to make sure we're selling as high as we can as we go lower. And the way you want to do it is a bull trap, just as we teach it in the free trading course. Now, at that point, we should be looking for that breakout to begin to pull back, and we can start using that breakout pullback as I mentioned before. How do you buy? How do you buy a market like this? I like the idea of the buy because, again, we're overall bullish on the 60-minute. What I don't love about the buy, though, is how bearish it's going to be in the short term. So knowing the bears have a lot of momentum at their back in this scenario, I'll try to trap them in. One try for the bears, two try for the bears. I'm going to use what's called a crown reversal pattern. Crown reversal patterns, if you're taking my free trading classes right now, crown reversals, right? Crown reversal patterns are going to wrap together two of the four patterns I teach in the free trading course. There's failures and there's traps. This is one try for the bears, two try for the bears, and that bear trap. That's the way you want to buy, overall bullish, but short term, very bearish. Trap those bears in and use their stops, right? Use their stops to fuel that move going back up into that range. Again, combine the failure and the trap patterns for that crown reversal. I teach both of these, right? I teach all these setups, by the way, in our free trading course, which reminds me, if you're one of the few folks watching right now who haven't taken the free classes and learned things like crown reversals, traps, failure patterns, what I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link and take that free trading course because the strategy I teach in that short video series will teach you a stupidly simple trick that we use use every morning in our members trade room to know exactly where the best winning trades are going to be that day. If you're not making consistent money right now, if you're tired of missing the best trades right now, grab that link, take that free course. You'll learn my 4 favorite entry patterns, make it easy to start making money on your own out there. Also, too, if you can't grab that link in the upper right-hand corner, I'll put all the important links I talk about tonight in the description of the video. So if for some reason you can't get that link that popped up there, I'll put all the important links in the description. So make sure you grab them there. That way you don't miss that free trading course. Okay, let's keep the party going. I just want to make sure you guys know where to get more information on this stuff if you haven't learned this stuff already. So as we're going lower, we're looking for what, right? Looking for trap setups as we go lower so we're not selling too low. As we take out these lows now we rope the bears in. We let them try once. We let them try twice. We try to harness their stops, right, as fuel to run back higher. Now, the moment of truth, right? Now, the moment of truth. We now get into the underbelly of that trading range. If we keep going, all right, if we keep going, just so you know, if we keep going and this thing begins to pop and begin to grind, I'm going to go out, draw a trend line off the highs. I'm going to mark a channel off that low, and I'm going to look for what we call a first test trap off the low of that channel. Now, again, make sure you see how this is setting up, right? In this example, we're going to go back to the underbelly of that trading range. We are anticipating a breakout pullback, but it's not happening in this scenario, right? It pops up, it begins to grind. And this is ultimately where you want to get good. You want to get good at finding channels. In the free trading course, I talk about when a market pops up and grinds higher like that, we draw trend lines off the high, and then we pin them down at these lows, and that's where I want to look for the entry. Now, this could be a trap pattern like I'm drawing here. It could also be a seller failure, get below the moving average, bears come in, they try to get short, right? When they fail, we can buy right into stops. With a failure, in a pullback, right? All 3 of these will work, right? Trap, failure, pullback. Again, take that free trading course I mentioned earlier, and you'll get a lot more examples of how these setups actually look on a real chart. Where would the buyers want to go? The buyers have one thing on their mind, right? Take out these highs overhead. So if we do get that crown reversal off the low, right, and it pops up and begins to grind, clearly getting above the lows of that trading range, now we anticipate that rotation back higher, and we start getting aggressive finding entries off the low of that channel, all right? Keep it in mind as we get that breakout pullback. The next scenario would be we break down, we get that crown reversal, we pop up, but now, see, pay attention now. Now the buyers, they're not successful. Right? Now the buyers come in. Remember, guys, anytime we see a strong move like this, we have to expect a pullback and a retest of that level. Anytime we see a strong move down, we expect a pullback and a retest of that level. So if we end up rolling lower here, even if we do get that crown reversal, which I'll be looking for tomorrow in the trade room, even if we do get that crown reversal and we pop up, again, think of the underbelly of that trading range. Now, watch the moving average. The moving average is the giveaway. The buyers will come in, they'll hold the moving average and go. Okay, that's your sign now. If they pull back and keep going, okay, now we draw trend lines, channels, right? We buy the low of that channel. However, if the buyers struggle, right? If they get up into this area, they try once, they try twice, right? They're trying to punch this thing back up into that trading range. It's an overall bull market, so we shouldn't be surprised if they're successful with a game plan for that. We know what to trade if it goes higher from there. But if these buyers start failing, right? Now we know that strong run down is going to want to retest that low. Now what we do is we use one of those 2 try failures. Why 2 tries? Because the range above us is a magnet. We're overall bullish. You want to give those buyers the benefit of the doubt, if you want my opinion. And then what I'll do is once I know where those buyers stops are, once I know where the buyer's pain is, that's the key. Think about where those buyers are going to throw that keyboard, right? Think about where the buyers get stopped out and you want to sell right into those stops for a run where? Back down to retest the low. Now remember, this is where things get fun. Okay, this is where that double bottom reversal comes in handy here, right? Double bottom reversal. Now remember at this point now, strong run down. The bears came in and held that breakout pullback. Where's their objective? Anytime we see a strong move like this, the bears want to what? They want to retest that low. Once they retest the low, everybody who sold that breakout pullback will now begin what? Taking profit. Okay, so the professionals, the smart money traders, the big lot traders, they're getting out at this low. Now watch for rookies. Okay, watch and see if rookies come in and try once and try twice. Remember, these are not professionals, right? These are not experienced traders. These are not big lot traders who can defend themselves. Okay, these are rookies. They have to be rookies. They're the only people that would sell this low with a range above us in a 60-minute bull market. These are inexperienced traders. By definition, they are. We don't sell low. We sell high. Rookies sell low. Rookies chase the move lower. Rookies are getting in when the professionals are getting out. Long story short, once they're in, now we know where their stops are. As you can see, I love to run stops. The easiest money you're ever going to make as a trader is trapping in this case, trapping in sellers into a retest of that low and then lighten those stops up for that run going back up where? Definitely back up to retest this interim high and leave a runner back up into that trading range. This is how you trade a bear market with a breakout pullback. It's traps on the way down, crown reversals on the way up. Do they hold that breakout pullback for retest of that low? If they do, double bottom with that 2-try failure. Again, this will make a lot more sense once you've taken our free trading classes, right? Patterns at least will make a lot more sense. And again, if they can push and get through that breakout pullback area, now we start thinking about that range rotation, and we start trading that rotation back up and taking out some of these highs overhead. All right, guys? The only other variation of this, which I do want to make sure you're aware of, is the pop and grind breakout. So for whatever reason, let's say, for example, overnight, we pop down and we start grinding, right? You could easily see that happening. Again, all these areas continue to be overhead resistance. Just keep in mind, though, anytime it pops and grinds like that, just draw that trend line off that low, bring it up around the high. And again, once we start seeing those bears come in and start getting trapped with that crown reversal, it's that pop up. And then anytime we see a grind, look left, find prior swings, 1, 2, back down to retest the low. It's a slightly different game plan, but it's the same basic idea. It's a breakout pullback, right? On the way down, look for those, right? Look for those traps going lower. Same thing I've talked about here so far. All right, guys, that covers the breakout pullback as we go lower. Now, how do we trade this thing and short this thing back down again, right? We know how to buy it, right? If the market takes off and goes higher, how do you buy it? You got to buy what? As low as you can. How do you buy as low as you can? With a bear trap. So remember I said earlier, right? Find that channel off the high down to that low, right? These are the types of entries we're looking for as we, right, if we end up going higher here. Make sure you buy as low as you can as we go higher, because you never know, right? There could be a channel coming down off that high, and we'll make sure I'm buying as low as I can. How do we sell this thing, though? Off of that high? Let's take a look at that. Good question. Let's go look at NASDAQ here. NASDAQ just gave us that juicy bull trap signal off the high of this 60-minute. The NASDAQ is virtually the same thing as the S&P. We know we're bullish overall, but that melt-up mark that we saw pretty much all week last week tells us that buyers are probably looking for a deeper pullback to buy nice and low. And again, I think if we play our cards right tomorrow, we can grab some of that deep pullback on the way down and then pop it right back up with maybe a crown reversal or a double bottom reversal later on in the session tomorrow morning. Let's grab a look now on the NASDAQ here. And what's the most important factor right now on the NQ? You'll notice right away it's that bear market into a trading range, and now Unlike the S&P is trying to go lower for a breakout pullback, right? The Nasdaq, of course, is rotating higher, and we assume now it's going to try to rotate back down and take out those lows, because anytime we see a strong move down, that becomes an objective and potentially complete that pendulum swing all the way down around 15,360, give or take a few points here and there. Most important thing right now is that we've got a lot of momentum coming in off of this low. I mentioned earlier in the video tonight how on a breakout pullback, I would want to see 1 try for the buyers, 2 try for the buyers, right? Remember that 2 try failure? Well, we're seeing one setting up right here, right now. And this one, though, I can use that trend line. That trend line coming up underneath can now be incorporated with what we call a 2 try failure off that trend line. Use that trend line as a level of resistance. Remember, bear market right now, trying to rotate back down into that range here. It's a lot of bullish momentum, right? As we rotate off the low, the buyers have already tried to go higher once. Let's see him pull back, try again, and this could be a nice, easy short, right, on this way going lower. Again, take that free trading course and you'll hear me talk about these types of patterns, these 1 try, 2 try failures. Whenever we have, remember, think about it, the stop losses, right? Their stops are going to be hanging out right below that low. We can get a pretty good entry off that trend line if we can get a good signal. So I like the idea of that 2 try failure, right, off of that trend line, targeting back into that range, ultimately targeting all the way back to the other side of that trading range. And then again, down here, right, think about that crown reversal, that double bottom reversal, as I had mentioned earlier on in the video. What if we go higher, right? What if we go higher? If we go higher, right? Because this is pretty bullish here overall, right? Pretty bullish in the short term, I should say. Bullish overall as well. If we go higher here right now, we're going to run right into overhead resistance. Now, tomorrow morning, we'll talk about if a breakout goes higher to trade that breakout. But if we end up going higher here right now overnight, we still have that range below us. We're still way high up in an overall bull market. So I do still think there's money to make there with a 2 try failure. So let the buyers try once. Let them try twice. Why twice, right? Why do I care for twice? Because we're an overall bull market. An overall bull market, I have to give the buyers the benefit of the doubt, right? Let them try a couple times up here. Once they do, then I have their stops. Then I know where their pain is. And then I can get that short going as we make that run going lower. Remember this key pattern, okay? This key pattern. As we go higher, we're looking for basically buyer failures, right? Let the buyers try once, try twice, sell right into stops. As we make that run going lower, I then start looking for traps as we rotate going lower, right? So buyers once, buyers twice, we're selling right into stops with a failure pattern. And then as we go lower, usually what will happen is it'll start to grind down. Once it grinds down, mark those swings, find that channel, and get looking for that first test off the high of that channel. The best ones are traps like I'm showing you right here, but it could be a bull trap, it could be a buyer failure pattern, really any of the core 4 entry patterns I teach in the free trading course will make for a great short off the high of that channel. This is that 2 try failure and then sell bull traps as it rotates lower, right? It's a 2 try failure. Again, buyers once, buyers twice. Give them the benefit of the doubt. Once they fail, though, bam, there's our short going lower. We're going back into that trading range. And then as it rolls lower, we don't chase it. Okay, we don't chase. You want to sell as high as you possibly can, and traps are always the bread and butter to sell as high as possible as it rotates lower. All right. Now there could be some variation of this, but this is the general idea of how to short as it goes up, 2 tries, and then roll back lower. Right. Look for those traps and short those traps on the way back down again. Perfect. And then again, don't forget, right? If we find our way all the way back down again, what do? right? We know where the pendulum is. We know where major support levels are down here. We don't pick the bottom, right? We don't pick the bottom. What we do, we look to trap the bears in, let them try once, let them try twice. Remember, you want to use the crown reversal in this situation because why? All of that bear momentum. Okay, if we find ourselves all the way down at these lows here, that will be a lot of bearishness like we have right now on the S&P. So trap those bears in and make sure you're buying as low as you can with that crown reversal pattern. Because again, what might happen is it may pop up and then roll back over again. And I want to make sure I've got that profit on. I want to make sure I have at least my 1-to-1 first target hit before we get more potential bears coming in and rolling it back over again. That's why we use crown reversals. Crown reversals are the easiest way to keep yourself out of trouble with trying to pick a bottom in a bearish market like this. And again, I like the idea of the crown reversal because we're overall bullish, but if we do end up down at those lows, it will feel very bearish in the short term. Now, once we retest those lows, now we can get a lot more aggressive, right? Anyone who sold that breakout pullback now, they're taking their profit down here. We can now rope in those rookies now, get them trying a couple times, and we don't need a full crown reversal. It'll be great, but all we need is that 2-try failure to basically trap the rookies in, right, and look to buy into their stop loss. Again, we call it the double bottom reversal off of that low, right? It's a crown reversal to make sure we buy as low as we can. If they roll over and retest, get a lot more aggressive at that low because now professional traders should be getting out of positions. Those are rookie traders, we assume, at that low. All right, guys? Now, the game plan's ready for tomorrow. We're back after a holiday break. This week could be a bit of a weird one, especially as we transition into the fall season, which means did a good job tonight, but I'm sure we're going to get some curveballs tomorrow in the morning trade room. And that's exactly why we do this stuff together every day in the morning trade room. We prep our charts tonight, put our game plan together, visualize the goal for tomorrow. But tomorrow, 8 o'clock Eastern time, we're going to roll with the punches, adjust as we get more information, and trade this stuff together tomorrow morning. If you're looking for a great place to come out and learn this stuff and trade along with me, we open up every morning at 8 o'clock Eastern time. I'll put all the trade room links, all the membership links, all the free class links. I'll put all the stuff we talked about tonight down in the video description. So grab that link and get joined up, and I'll see you tomorrow morning at the opening bell in the members trade room. At the very least, though, make sure you take that free trading course to learn the basic principles, get your feet underneath you, start getting winning trades consistently. Be ready to go with us in the morning trade room here soon enough. If you get any questions, any trouble getting access to the free classes, don't be afraid to call the office or use live chat. We're always here standing by to help out as well. So if you need help, don't be a stranger. We're always here to help if you need us along the way. In the meantime, guys, have a great rest of your evening. Get some rest. I'm sure most of us had a busy holiday weekend. Back tomorrow, though, 8 o'clock Eastern time, Wednesday morning. If not tomorrow morning, we'll see you guys back here same time, same place tomorrow night. My name is Joseph. Thanks for tuning in. Be well, be nice to each other out there, and be here next time. Adios, amigos. Bye-bye for now.